is our hat is down. It was shaping up like it could go higher, but it came out with its earnings and they weren't viewed to be so terrific. Pattern was questionable, but it was shaping up there like it could go higher. Not happening. All right. So markets are going up and the Dow is on its way to a new all-time high. It's confident as I could be to say it's going to happen. It's going to happen. Right? So here are the futures moving up toward the old all-time high. And again, this is a continuous contract noted by the morning pound, the pound F. So looking at the cash, right, it's not that far off, and you can see the difference in price, but that is closing. When I was looking at this to see exactly what the high was, what was interesting is that this bar actually closed right on the high of the day. And what's interesting about that is, and I've seen it over the years, where you get this kind of a run, which in of itself was climactic, so when it started, well, you got to go way back here, right? It started, it rested, it went up, little, consolidation, building the support area, the red bar ignored, reversal, and then blast off. And a lot of times when you get a run like that, one of the tells is that the high bar closes, exactly at the high of the day. And I didn't look at all of these, but just eyeballing it, and they look like they're off. Could be a couple of points or whatever it might be, but that one closed right at the high. That was just interesting. I mean, the run in of itself was to say, hey, this thing is getting a little too far. And then I don't remember what the news was at the time as to why things fell as sharply as it did, other than, people just, saying, wow, just an incredible run and profit taking, which, whatever the reason was of the gap down, sometimes selling or buying just feeds on itself. And, when there's a void below, you get a collapse. And then we know the history of the whippy bottoming type of price action. We've talked about how it began tightening up here and so on. And now, as you can see, well, that's yesterday, the move up, and the Dow has been outperforming. And right now you can see that the Dow futures are up another $138, pushing up toward the old high. And so the theme that I wrote about several weeks ago of the Dow making new all-time highs, the transports making new all-time highs, and then the internals coming into alignment to say, hey, that's all wonderful, but be careful here. So that's beginning to shape up. And today's action, assuming it, it just continues to go higher. And at the moment, there's no reason to think that it won't. Everything looks good. We're going to see how that shapes up. And so just looking at the internals right here for the moment, sentiment is pushing up here where it's just touching that inside band, but that's really not a concern yet. I'm taking note of it, that the idiots are getting a little anxious here or jumping on board, whereas down here on the pullback, they're looking for the collapse. So this is the day-to-day. This is the moving average. This is the bands around the moving average, and ultimately 0.80 and 1.2 is the static levels that we monitor. So this could easily push up higher as the markets push up. And this is a little bit of a concern, tell you the truth, that which this breadth is not even past the zero line yet. So this has been, not a move higher where you've got a broad participation. We know that FANG stocks are lagging, and semiconductors, the technology, which typically is what helps, bring the market up. But, some of them began to perk up a little bit. Apple had the bottoming tail bar, Facebook did have a reversal. Google tried to, it looks like it could go up, where it was the prior weakness. And so those stocks, just might lift up just because, market sentiment, buyers are coming in here and they could go higher. And of course, the financials did fantastic yesterday. That was, what was leading. There's the wide range bar. So all of these things are coming together to where it's a perfect world. And, the market is perfect. And it's like, now do we get a blow off kind of a run here where, it's September, the market has, the worst time of year. And, while there's been some sideways correction, maybe at this point, things start to lift up and they go higher. And warning, Will Robinson, we know what happens when everything looks great and, breadth and sentiment reach an extreme. And so we look for it, is the breadth going to get to an extreme as well? And then at some point you get some type of a shock up at the highs, similar to what happened in that marijuana stock yesterday, which was an incredible run, right? We had tagged 300 and then began to collapse. And that type of move is not expected in the market, of course, but extremes in sentiment and where just any kind of risk is not perceived to be there is where risk really rises. And we measure that with market internals and price patterns. And so now it looks like the financials are going to start to bring up the rear. That's all well and good. Maybe technology does pick up a little bit. Let's just take a look because the technology ETF in of itself doesn't look bad. And this could push up to new all-time highs as well. And where is it? Internet, where are you, Internet? There you go. That's been the dog as of late, just chopping around primarily, in part, Facebook collapsed and then it couldn't hold this area and it dropped. And, Twitter looks like garbage and Snap looks like garbage and so on. So, but Amazon is Amazon and it'll just continues to do pretty well, but it's had a little bit of a correction lately. No cues. But that's actually a bullish pattern, the lower high, lower low into a rising 50 and major support. Now, the retracement is a little deeper since it's at major support. By definition, that's, a deeper retracement than to minor support, but it's where buyers should step up again. And, Amazon should push up and assuming, the market's going to go higher, which it certainly looks like that's in the cards. What's happening? Look at the S&Ps. We've been looking for this to go higher. It's going higher. It's new all-time highs. It looks fantastic. The Qs have been lagging. They'll try and play catch up. We'll have to see if they actually make new all-time highs. But let's just imagine for the moment that the Dow's making new all-time highs. And we have the transports making new all-time highs. The S&Ps are making new all-time highs. And we have maybe the Russell joins the party. And that's what should happen, today, that this should turn around here and get a green day and get itself in gear to join the party and that moving up and all of these things coming together. CNBC will have their party hats on and what happens historically when that's the case. So we'll see, but things are shaping up as has been anticipated for several weeks now. And there's been these jiggles along the way that was like, oh my God, look at this red bar, the S&Ps here, look at that red bar. But you always put red bars in the context of an uptrend, right? We give them less respect. Like I say, less respect, less weight, because they're pullbacks in a smaller time frame. And when that happens, there should be a transition. Sometimes it's not immediately into the next bar, but you get these pullbacks, and then you get transitions. And if we look at the weekly, and it's the same idea. There's a red bar, one red bar down and back up. And here's the transition. So these are one of the Master Trader Technical Strategies concepts of transitions from red to green and how to use multiple time frames and read that at the appropriate moment when you should get the transition. And the idea is with a higher time frame bias, in this case being up, how to participate in the lower time frame while it's correcting to get the transition from red to green, right? It's a simple concept. It's a powerful one, but you have to know it and understand it to utilize it. It's like anything else. So what else? You have energy, which is starting to participate and build up after this crazy break lower and pushed up to resistance and back down and back up again. So maybe some consolidation here prior to going up would be appropriate. If it takes it out, then we have to wait for a pullback since it's already going up several days. Yep, we'll take a look at NVIDIA for you. And utilities finally gave it up. And this was it was confusing to me, meaning I was looking at these utilities and saying, why are these holding up so well with this bullish pattern here? Like they're going to go higher, and interest rates were pushing up. And so here's the 30-year. And it's like, this is going up. This is not good for utilities. It's good for banks. Banks are not going up. Utilities look like they're going to go higher. It's like, what is the disconnect here? What am I missing? Because this is not what is supposed to happen. And then, for whatever reason, things flip yesterday to where what is supposed to happen actually happened, and it happened fast. So, the market always keeps you on your toes. Always, there are things along the way where it operates just like it's supposed to, and that's fantastic. And then there's these times where just somehow, you feel like, is it me or what? It's just second guessing. What's changing here? What am I not seeing that someone else is seeing? You have to question your method at times where things aren't set up, because you learn from that. And then, things just came back into alignment really fast yesterday, with utilities going higher and financials pushing up, and the regionals, which certainly looked like they were going to get smashed. And, they didn't have the day that the bigger banks did, but they did turn around. So, it was across the board good day for financials there. And that looks good. So expectation is new highs in the market. We keep an eye on the market internals to see if they line up to give us, the warning sign. And until that happens, we go with the trend. Right? That's what we do. We go with the trend. Oil cracking here above these highs looks good. Bonds going lower yet, but holding yesterday's low for the moment. Gold, don't care about it, not yet. And we'll take a look at NVIDIA, and then Dan can check out open positions. So NVIDIA, if I remember here, you had a put spread on this, Ken, right? A 270, 267, something like that. And it looks like maybe you're going to get lucky. It's up here, up now. Well, that's a weekly. Let's go to a 60-minute. It wasn't looking so hot for you yesterday. 267. What's going on here? Oh, it's weak again. Back down. That's odd. In an up market, maybe you're not going to get lucky. I don't know. It's certainly not a good sign that it's below yesterday's low, unless it reverses immediately at the open. Since the markets are showing strength here, what's going on over here? And let's look at, I don't know how much of a connection it has toward Intel. But what's in Intel's up? What's MU, which has been MU's up. AMD got an upgrade today with a target of 38, and that's holding up. So I am assuming that there's some news on NVIDIA because that should be higher here. Now, news or no news, your put spread isn't looking so hot. So maybe the market will drag it up. And yeah, so we'll see. All right, guys. Go ahead, Dan. It's already 9:20.
All right. Hey, good morning, folks. Yeah, we've been very patient, but bullish. Remember yesterday into the close, I said, Pat, so